Hey, good evening, all. Can someone please confirm if my audio is audible?
Yes.
All right. Okay.
Yes, audible, but
All right. Okay. So maybe I'll just mute you all so that we do not have any sort of disturbances. 1 second. Okay. I think we have decent participants. So let's start, or should we wait for 2 or 3 minutes? I'm audible, right, guys? Can someone please text yes or no? I've made you all mute, basically. Can someone please confirm if I'm audible? Okay, great, great. All right. So now, so let's wait for like another 2 to 3 minutes, okay, and then we'll just jump start with the session. So I'm not sure like what expectation you guys have, but what I'll try to do is like maybe let me share my screen. Okay. Okay. 1 second. Yeah. So you guys might have seen this slide. So wherein I've mentioned something like the adjustments which you will not get on YouTube. Okay. I'll just try to justify it. Okay, I'll just try to justify it. I think I was not planning to mention that, but just to drag you all guys saying that yes. I mean, I think maybe few people will accept it. Basically, I'll prove it. Okay, so today we are going to see some see. I would not call them as adjustments. Basically, it's all about the mindset. Okay, it's all about what do we say, right? Your emotions, your psychology combined, everything, your position sizings, everything will be combined. So I'll be just showing you all these adjustments. Okay, one trade, basically I'll take my real trade, all right, and then I'll try to show you like what all different adjustments we can do, guys. Okay, so before I start the presentation, right, just switch off your comparison mode. Just try to focus for next 1 hour on the content what I'm going to discuss. Try to just close the comparison mode. Okay, don't try to compare what if this happens, that happens. See, trading, right, sustaining in the market is very difficult. If and else will be there, if else if, right? No two person's perception will be same. Okay, even if I say 2 plus 2 equal to 4, the other would say 2 plus 2 equal to 5, which is right in the market. If sustaining the market is so easy, right, then 99.99% would have not lost their capital. Okay, we have to do something different, basically. Okay, so you are able to see my screen, right? Yes, I'll just try to prove this, the adjustments which you might have not seen, especially if there are any students of my batch one. So I think they might know about few of the adjustments, but even for them, this would be like a sort of recap, basically. Okay, now, see what I'll do is like, I'll just take you to the next screen. See, I want you guys to read out all these 4 to 5 bullet points. Please take 1 minute and read out. And if I can do that, you guys can also do that. Okay. See, the only way to trap Mr. Market, maybe this could be a very bold statement saying that can someone trap Mr. Market? Yeah. End of the day, end of the session, you have to answer that. The only way to save the capital. Basically, my trading style is composed of saving the capital. I never ever give the importance for the profit. If I'm able to save my capital, profit is byproduct. Okay, the only way to enjoy the trading, basically, guys, you have to enjoy the trading. I mean, if you are doing the same traditional adjustments the way 99.99% retailers do, you want to lose. You want to lose your capital. That everyone knows, but still, people will not believe on the contra system. The only way not to glare terminal, guys, I'm not a full-time trader. Okay, I started the trading as a passive income. That's it. I'm not a full-time trader. I do not sit in front of the terminal, right? Because the last point, the only way to auto adjustments. My trades are basically auto adjustments. Basically, one trade A trade B will do the auto adjustments for trade A. So same way for trade A, trade C will do the auto adjustments. I'll show you all the examples. I'll show you. So all these 5 things are possible only through contract trading. Maybe looking at the name contract trading, it might be like very complicated, but believe me, friends, this is the only way you can achieve all these things. If at all you want to achieve all these things, right? If you want to trap the market, see, when I say trap the market, basically you should not give any single penny to the market. If you are able to protect your capital, let's say you get like 1 lakh capital, if you are able to protect your capital for next 6 months without a single profit, you are a pro trader. Many of the people say that see, protecting the capital is very important. I think different people might be having different experience, right? Few might have started and they might have ended up their capital again. They started with round 2, round 3. Okay, so let's not talk theory. Let's jump on to the practical session. So we have like a decent audience. So guys, do I make sense? Do I make sense so far or not? I know we have discussed only theory, so I'll show you all the practical now. Okay, so now what I'll do, I'll take you to my real trade. All right, guys. So now, before I take that, see, in the Twitter, maybe day before yesterday, I asked this question to my friends basically. So I said, this is my trade. Okay, so which is basically giving me a profit of 2,141 on a capital of 1,36,000. And the question was, I said, uh, see, already I made 1.5% profit on the capital deployed. Suggest me a few adjustments. Okay, suggest me a few adjustments to mitigate the loss of the call side, to mitigate this loss. Okay, if market comes down, this is bank nifty, I'll explain to you, I'll get into profit. If what if market takes the u-turn, what if market goes on the call side? So I've asked like few people to suggest me, right, few of the adjustments in case to mitigate the loss on the C side, just in case if the market stays static or mild bullish or super bullish. 3 conditions. Even if it is like static, you'll end up into this loss area. Even if it goes mild bullish, you'll end up into this loss area. Even if it is like super bullish, you let's see who has what. So few people have answered basically, right? I think see there are like few people who have answered, right? Buy the C at break even, shift all the position on upper side. I mean, kudos to all those people, at least who have at least tried to attempt. So basically, what happens in the Twitter is like we unnecessarily discuss about other things. What I thought is like let's have this Q&A based on the trade so that people will share their experience. Now, what I'll do, see, this is my trade basically, right? The same trade I'll take, guys, and I'll try to show you how to mitigate the loss of the call set. So what I've done is like I've taken 2 trades basically, 2 tabs. Tab 1, this is my original trade, guys. This is my original trade. Okay. The same thing, tab 2. Guys, do not annotate my screen. 1 second. How to remove that? Maybe can someone, whoever has drawn the line there, can you please erase that line? I'm not sure where to see that. Okay, yeah. So now, so I have 2 tabs. Tab A with my original trade, okay, and tab 2 just to do all the adjustments. All right. So now what I'll do, see, now again I'll take you to this slide, right? So basically, I've deployed a put ratio spread. Okay, so how we can mitigate the loss of my put ratio spread with other directional trades. Okay, so whenever we have deployed the put ratio spread, definitely, right? So we can do it with call debit spread. We can do it with call ratio spread. We can do it with naked CE buying. Guys, maybe for few people it might be some sort of advanced, but nothing is rocket science. If you, I mean, I'll deploy this video into the YouTube. If at all it is like confusing, or if you think that this is like bouncing for me, right, you can watch 1 to 2 times. Okay, and how we can do it with CE calendar spread, with back ratio spread, with CE broken wing price. See, all this I do it in the real market. Okay, now what I'll do, so this is your trade. Okay, let's discuss about what is this trade all about. So what I've done is like I've just deployed a put ratio spread. That's it. So if I deselect this thing, this is your typical debit spread. Okay, but I've taken 2 quantity. I'll show you why. See, the best thing what we can do is like, guys, don't go with 1:1. right? You have to go with ratios. Basically, you'll get to know why I'm telling you to go. So I've taken two. I bought 39,500 to buy, and then 39,000 by having a 500 point spreads. Okay, I've sold two, and then this is your typical debit split, PE debit split. Just to mitigate this loss, just to reduce this loss of 7,153, what I have done is like I just sold a FAR OTM PE for 78 rupees. That's it. The moment I've sold this, my loss has now reduced to 5,000. Okay, if I do not have this extra sell position, my loss would have been 7,153. But just to reduce that loss, just on the deployment day, what I've done is like I've just sold this. So this is your typical 1:1:1 ratio split. Okay, now I do not recommend many of the folks to deploy the put ratio spread on the bank nifty, because bank nifty can be very volatile. But check the range, guys. Check the range, 4.3%. Your loss will start only when bank nifty makes a 4.3% gap down. So when I deploy the put ratio spread, I ensure that I have good safety on the put side. Yes, on the call side, we can deploy the call ratio split with just 1.5% to 2.5%. But on the put side, guys, this is one of the benchmark what you have to remember, right? Whenever you are deploying the put ratio spread, either go for pure debit spread so that your loss, you do not have unlimited loss on the put side. But even if you want to go for the put ratio spread, ensure that you have decent range, 4.3%. Okay, so sorry guys, I'm just discussing about the basics because you have to understand the base trade, right? This is the base trade, and if you understand this base trade, so then the adjustments you'll be able to understand easily. Now you have unlimited loss, but this unlimited loss is on the put side. Okay, once the market makes 4.35%, which is very decent, and if you have the concern of market can open the next day 5% circuit, 10% circuit, don't go for this. Just go for put debit split. That's it. Don't sell this. But if someone is like a sort of aggressive trader, smart trader saying that 4.5% is not feasible, wrong to say feasible, yeah, which it can happen, but we have to take the calculated risk, right? We are not taking the risk of 2%, 3%. We are taking the risk of 4.5%, and then your loss will start. Okay, so your loss on the call side is 5,000. Your profit is almost 20,000, guys. So this is sort of 1:3 risk to reward ratio. All right. So now, see, what I'll do is like now I'll start showing you all the adjustments, guys. Next 1 hour, I mean, I'm not sure like you guys will get convinced or not, but this is all about adjustments. So now, the reason why I've taken this two lot, let me take the epic pen, guys. Guys, is my audio audible? Any sort of disturbance? Everything is smooth, right, so far? Can someone at least type yes, no? Okay, great. Now, what I'll do is like the reason why I've taken this two lots, two buy, two sell, and why I've taken only one lot sell, right? You will understand now. Okay. So let's say, see, already I got 2,000 profit on a capital of 1.36. So which is ideally, how much is that? Almost like, I would say like close to 1.5%. If someone wants to exit, you can exit this trade. Point number one, guys. If someone wants to exit this trade, right? The reason why I've taken this trade, even you should understand that, right? Okay, let me take you to the trading view. See, you should not be deploying any trade randomly, but basically it should be like backed up by the price action. Let me show you why I've deployed this trade in Bank Nifty so that you guys will get to know. Okay, see, simple guys. My price action, okay, see, this is my price action. Okay, this is a 1 day time frame. Okay, whenever it took the resistance, it came down. Took the resistance, came down. Took the resistance, it came down. Again, it took the resistance, came down. And now, you know, right, market sentiment is bearish. Everyone is telling that Nifty or Bank Nifty might see like low of 5%, 10%. So the moment it took the resistance of this 200 moving average, I have deployed this put ratio spread. Maybe if someone is getting confused with the price action, guys, I mean, nevertheless, don't just ignore it. I mean, basically this is because when I've deployed the put ratio spread, there should be certain factor, right? Why I've deployed the put ratio spread? Because this Price went, it took the resistance of 200 moving average. This is a 200 moving average, guys, what I use. The moment it took the resistance, so I thought maybe it will come down. That's it. That was my probability. Basically, I'm not predicting. I thought maybe it will come down. So that's the reason I've deployed the put ratio split. Again, let me take you to this trade. Now, if someone wants to exit the trade, exit with 1.5%. But if someone wants to hold this trade, see what you can do is like we have two quantities. Okay. Now keep a check on this loss, guys. Loss is 5,000. So all these adjustments are out to reduce this loss. That's it. Out to reduce this loss. Okay. Now you got 2,000 profit. What if the market goes tomorrow upside? Unnecessary. You'll end up losing this profit and you'll get into the loss side. So point number one, what you have to do is like you have this. See, what you can do is like first adjustment is like let's say you go Friday, we are doing this session on Sunday. Friday, end of the day, you got to know at 3:20, you got to know some bad news, right? Maybe see, it can be anything. It can be anything, but you have a concern, or throughout the media, Twitter, everyone are telling that maybe Bank Nifty will open 5% circuit, down circuit, 3%, right? Then what you can do is like, do not just exit this one. Just exit this second sold position. That's it. Convert your ratio spread to debit spread. In case if you believe the news, in case if you believe the news saying that tomorrow, Monday, when market opens, it will open with 5% circuit, 10% circuit. That's it, guys. Make your job easy. You should have peace. What do we say? You should have a good sleep, right? Peace of mind. Exit this trade. That's it. See, I'm not exiting now because we have only 300 rupees loss. Okay, what I'm doing is like ideally what I have to do is like I have to click on this exit, and then so just square off this leg, and then you are left with your put debit spread. Even on Monday, if Bank Nifty opens 5% circuit, you will be in profit basically. You will be not in loss. But just in case, if this leg is there, if Bank Nifty opens tomorrow, Monday, 6%, unnecessary, you will get into 16,000 loss, which is, I'm not sure whether you believe on this news or you believe on your technical analysis, you believe on your experience. It's up to you. So for people who have like concerns of circuit, convert your ratio spread to debit spread. That's it. Exit this complete leg and convert it. Now, the second thing what you can do is, guys, you have two quantities. So what I'll try to do is like I'll just try to book one quantity and let's see what happens. Okay, I'll just go here. So 39,500. I'll try to sell, and what 39,000 buy, I believe. Okay, that's it, guys. So now what I did, see, I've not done any magic, right? I'm just booking partial booking out of this two lots. I'm just booking one lot. That's it. Okay, now check the, see, one lot and one lot. Okay, 39,500. So we are selling it because we bought it, right? We bought this. So to square off, what we have to do, we have to sell it. Okay, so that's it. The moment I've done with one lot, check your profit, check your loss now. Your loss has reduced from 5,000 to 381. Okay, see, I mean, these are basic things. I know there might be some few advanced trader also, guys. If you are advanced, right, just try to bear with me because I have to even explain for some basic things also, right? And then we'll just move on to the advanced. We have too many adjustments, guys. Okay, so now the moment I've done this, that's it. Still my loss will start. Now, the moment I've squared off single lot, I've done the partial booking. Now check the magic. My loss has reduced from 5,000. Let me uncheck this. My loss was 5,181. The moment I am doing the partial booking, my loss has become almost zero, guys. Point number one. Check the profit here. Right, your profit is 12,000, which is still 8% in case if the market expires between your two sold position. But just in case if you have not done this adjustment, your profit would have been 20,000, which is 13%. Right? This is called what did I say? This is all about the mindset. Now you imagine if you are expecting 13% profit in a week of time. I mean, I'll not call you as a gambler, but end of the day, it all depends on the view of the market, your psychology, the way you adjust, right? Still, I would say. But if someone is not expecting 13% profit, if someone is happy with 1%, 1.5%, ideally you got your profit. Exit this trade. But if someone wants to, see whatever profit I got, right, 2,000 profit I got. So I'll just sacrifice this 2,000 profit to get maybe 19,000 up to 19,000 profit. So then you can do all these adjustments. Okay, now what I'll do, The adjustment number 2, the moment you do the partial booking, your loss has become 381 from 5,000. Still you have decent profit, guys. Still you have decent profit up to 8%. Check the blue line. If market tomorrow makes 1.61% gap down on Monday, your profit would be tentatively 6,200. Check the black box. That is projected profit, guys. It is not actual, because there are like too many factors involved, right? Based on your VIX, based on the interest and everything, but tentatively you'll get like 6,000 or 5,800 profit, right? So literally I want market to gap down, so I'm safe till, even if Bank Nifty gaps down by 3% tomorrow, still my trade will be green, right? You got it right. This is the reason I deploy the put ratio spread in such a way that it should be able to sustain the gap downs. Point number 1. Okay, now this is 1. So if you square off 2 things, so definitely this is how this will become, right? So now the other thing what I'll do is like, so we have discussed the second adjustment. Okay, loss has been mitigated from 5,000 to 381. Still you have decent profit. Even if the market gaps up by 10% circuit, you lose only 381 rupees. Now, guys, are you clear? At least can someone please type yes if you're able to understand, or am I making it very complicated? I mean, we have too many adjustments. Okay. Okay, right. I mean, these are only the basics, guys, and you will, I mean, believe me, stay with me. Do not conclude. Stay with me, guys. I mean, you will not get this type of adjustments anywhere on the YouTube. I mean, I can guarantee you that. Okay. The second thing what I'll do is like, now what I'll do, okay, see this 39,000, right? Okay, 1 second, guys. I'll exit this 39,000. 1 second. Yeah. Now what I'll do, I'll exit 2 quantity of 39,500, and then what I'll do, I'll just try to go to 39,300. I'll try to buy this 2. So, okay, not 2. 1 second, guys. Okay, see what I've done is like same thing, guys. Okay, now let me, 1 second. Yeah, 39,500, it is 39,000. Let me uncheck this thing and let me make it to 2. See, even I get confused at times. Okay, even you can do this thing also, guys. Right? That's what we have discussed, right? My bad. Okay, I'll make it to 1. Okay, yeah. So if someone has the view of the market saying that market is sideways to bearish, but you're not certain, it might go up also, so then you can do this adjustment, guys. Okay, so now the moment you have done this adjustment, see initially what we have done, 1 second, this was the original adjustment, right? The moment we have done this thing, your loss was only, my bad, where am I? 39,500. I've sold 39,000. Achha, okay, my bad. Right, we bought it for 1 lot. Okay, so this was one of the adjustments wherein your loss was 381. But if someone feels that market can also go up, so what I'm doing is like, I'll go for 2. Go for 2, and then even I get confused at times. Okay, so now what I'm trying to do is like, I've done the rollover, right? 39,500. I've booked 2 quantity now. Check this, 2 quantity I've booked, and then I've done a sort of roll down, right? 200 points. So now this is how your trade will become. So now even if the market goes up, you will get with 2,000 profit on a capital of 1,25,000. So you calculate the percentage, right? Your capital is 1,25,000. Even if the market goes like 10% circuit, right? Still you'll be getting with 2,000 profit, which is basically 1.5%. Now you might be asking that question, right? This guy is already getting 2,000 profit. Then why the hell is he doing all these adjustments? Yes, if market goes up, I'll be like locking my profit. If market goes up, right, I'll not even get into any panic mode, right? Anyways, I've locked my profit, so I'll be getting my 2,000 profit anyways, but I'm just taking a chance because I've deployed the PE ratio spread looking at this price action. So I said market looks bearish for me. Okay, so if that happens basically tomorrow, so then I'll have the scope of getting additional uh, what is it 9,544. So what I'm doing is like I've locked my profit, guys. Basically I've locked my profit on the upper side also, but just in case if the market comes down, I'll be getting with 6% profit, which is 9,544. Still have decent range, 3.2%. Keep a check on this range, guys. Whenever you are doing the adjustments, guys, whenever you do the adjustments, your range will decrease. See, you cannot have heads and tails, right? End of the day, it is either heads or tails. See, let me uncheck all this thing. When we initially started, we have 4.3% range on the downside, but slowly as and when you go close to expiry. So what is the expiry, guys? Expiry is 29th, not on 38th. So I have to just maintain, I have to just control this trade only for 3 days, for 27th, 28th and 29th, because 30th is off. So for 3 days, as and when maybe Monday, I'll try to do this adjustment. Okay, so for Monday and Tuesday, I do not need this 4.3%. The moment I do this adjustment, 3.2% is also good for me as and when we go close to expiry. Okay, this is the common adjustments what we can do with the existing trade, guys. So now what I'll do, I'll just clear all these trades. Okay, now we are back with what? My original trade. So now I'll just go to the actual adjustments what we have to discuss. Okay, this is one. So what did I say? Live session today at 7:30 on Zoom, right? Wherein you'll be like seeing like unique adjustments and the non-traditional adjustment to mitigate the loss of my bank nifty PE ratio spread. So let's start with CE debit spread. Now you guys might be wondering what is he trying to say, right? When the market goes up, see, when the market comes down, bank nifty comes down, you have up to 13% of the profit, point number one. But what if market goes up? So when market goes up, guys, can someone please type me what all strategies we can deploy for the bullish market? Can you guys quickly type? Because my loss is on the call side. My loss is on the call side. So what all strategies we can deploy for the bullish market? Can someone, yeah, CE buy? Absolutely. Quickly, guys. So I want this to be like interactive, right? You got it basically because I've already shown you this screen. So now let me do one thing, right? What if I deploy a bull call spread here, right? I'll not do anything, guys. I'll just go to this ready-made trade. Okay, I'll just go to the ready-made trade bullish. Let me deploy a bull call spread. Okay, see, ideally I'll not be doing this thing. I'll be like selecting all this strike, but let me select a bull call spread. That's it. Okay, this is how your trade will look like. Okay, now what I'll try to see, this is the way you have to analyze, guys. Now what I'll do, I'll just unselect the original trade. Now this is what I'm trying to deploy, guys, right? I've just unselected the original trade, but I've just enabled the call bull spread, right? Call debit spread. This is the typical call debit spread. Okay, if I select this, right, this looks very weird, right? Yes, you have profit on the downside, but your profit is on the upside, but in middle you have loss. Can someone please tell me why we have the loss at this level? At this level, ideally this is not the right way, right? So the moment we deploy the call debit spread, it should be something like I should have profit on the downside and also I should have profit on the upside also. Okay, so now what I'll try to do is like, again, let me unselect this thing because see this loss, this 5,000 loss, right, on the call debit spread is getting merged with your already, let me deselect this guy, please have patience, right? So now what I'll try to do, okay, now what I'll try to do, I'll deselect this thing. Okay, I'll go to add edit, right? So now what I'll do, I'll try to go in the money because I want debit spread in such a way that my profit should start from, see, what if I do this thing, right? Now, see what I've done is like now my break even, right? The moment the bank nifty goes up, I'll be getting into profit. If it comes down, I'll be getting into loss. So what if I merge this debit spread with my existing trade? Okay, check the beauty now. Now your loss has reduced from 5,000, at least from 5,000, I was able to make my loss to 1,854. What can I do to mitigate this loss, guys? By just deploying a debit spread, on my original put ratio spread, I was able to mitigate my loss of 5,000. Let me show you. right? This was the 5,000 loss. Tap 2, I was able to mitigate it to 1,854. What can I do to make this 1,854 loss zero? Can someone please tell me? Don't say more, David Sendil. Okay. Now what I'll try to I'll try to increase the quantity. Let me see. That's it. I've just increased the quantity to 2. Okay. Now check the profit and this thing. Now, okay, it's the same thing. On top of my put debit spread, I've deployed the call bull spread. But the selection criteria of the strike and premium are very critical. If someone goes and deploys I've shown you the example, right? The moment you go and randomly select the debit spread, the loss. So this is what now, even this is fine. Check the range. You have the range of 3.4% on the downside. If the market goes upside, still you will be able to get with some decent profit. It's up to you. I'm just showing you different permutations and combinations. Now, no one should debate with me what is this strategy, right? I'm just showing you, considering the audience, right? Multiple audience. I'm just showing you, right? Don't you think this is like peace of mind? Now, see, the crux of this takeaway is like I'm able to reduce the loss of 5,181 by just deploying a debit spread. Check the capital, guys. 1,36,000 was your original capital. The moment I deploy, this is only 1,85,000. So we are hardly pumping in another 40,000. But by pumping in another 40,000, you made your loss zero on the call side. Still, you have good, decent range on the put side. Now, if at all someone wants to do other adjustment, right? Exit this, right? Exit this position, this second sell position, and check the beauty. Now, still you have, now check your margin has reduced from 1,80,000 to 1 lakh. Okay, your loss is still 498. Now I'll just leave it to you how to mitigate this loss also. But check the beauty, you have almost 8% of the profit. So we were able to mitigate the loss of 5,000. Again, I'm telling guys, 5,181 to mere, how much is this? 498. Now you have to put that effort how to reduce this loss 498. So you have to just play with the strike, with the quantity, you are done. But if at all you're okay, right, with if you have some good decent capital, I have this trade, right? I'm not confusing you guys. That's it. On top of my put ratio spread, I'm just deploying a call debit spread. Nothing rocket science. That's it. Leave it. If someone says this is check the blue line, guys. Check the blue line. All my strategies will be check the blue line. The blue line is so steep. The blue line is not like this thing. Okay. Even tomorrow, if bank nifty makes a gap down of, let's say, 1.6%, you will be still with profit. With 2%, 2.32% of gap down, still you are in profit. Your loss will only start when the bank nifty makes 3% gap down. If you are concerned about this gap down, what did I say again? Exit this sold position. That's it. Now you can hold this trade without panic. All right. So we have discussed, see, I can discuss for hours and hours. I've discussed with the CE debit spread. Okay. See, if at all you want to discuss everything, right, this would be like very time consuming, but you got it right. So now I want you to play with CE ratio spread. What is CE ratio spread, right? What is CE ratio spread? Basically, now let me select this. Okay. Let me see, guys. Now what I'll do, see, if you want me to show payoff blue line represents trot date on Monday 8 p.m. No, not matter. Now see, even if I go to 9:15, not a big deal. Okay, 9:15, right? Yeah, not a big deal. Right? See, what happens is like this is the projected, right? This is there will be not huge deviation. Yeah. If I take, see, maybe on Friday, the blue line might have been like this. On Friday, the blue line might have been like this, right? As and when you go close to expiry, your blue line will become steep upside. See, now let me show you, right? If I take you to Tuesday, keep a check on this blue line. Sorry. Okay. Where is that? Okay, 1 second. Yeah, just keep a check on this blue line. Okay, if I go to Tuesday, see, the blue line went up. Okay, and now if the market opens 1.6%, you'll get 6,700 profit. Monday, you were getting it a profit of only with 1.6%, you were getting a profit of 4,000. But Tuesday, because check the blue line goes up. With the same moment, you're getting 6,766. And on Wednesday, which is like expiry day, okay, your profit would be at 1.6%, your profit would be 10,000. So you have to understand the crux of this blue line, guys. Based on this blue line, you should have the safety measures and everything. Okay. Now, what did we discuss here? If at all you want to deploy, if at all you want to deploy the call ratio spread, guys, you do that activity. Not a, see, based on this thing, what is call ratio spread? Basically, you have to have one more soul, because you guys have to do that homework. If I show you everything as a movie, right, you'll watch it as a movie, but at least you do that activity, you'll get to know. And I want to discuss about this thing, guys. I want to discuss about this one, right? Naked call buy. This is very important. Naked call buy. And I want you guys to tell me, okay, let me clear this trade. Simple, right? I'm just back. I'll reset. This is my original trade, guys. This is my original trade. Now I want you guys to tell me how the naked call buy will help me here, right? Simple, right? How the naked buy. So let's say I'll not try to show you simulation, but let's discuss. Let's say you bought a naked call, okay, and let's say your stop loss is 50 points or 100 points, guys. I'll just leave it to you. Okay, I'm just giving you a template. Okay, so let's say you bought a naked call here, okay, at the ATM. Let's say the market goes 50 points upside. Already you have 2,000 profit. Okay, now what I'll try to do is like my sentiment on the market is basically bearish. But what if whenever we say bearish, market will go upside? When we say upside, market will come downside. So this is where we have to trap the market. Now, intentionally, what I'll do, I'll just buy the naked call. Okay, by having a strict stop loss of 50 points or 100 points. Okay, let me show you, right? So what is 50 points? Basically, 50 points into 25 is the lot size. So I'll risk 1,250. Already I have the profit of 2,000. So let's say I'm risking 100 points here. Okay, I'm okay to lose this into 25. Just an hypothetical example, guys. Okay, let's take 2,500 is a profit and 2,500 is what I'm planning to risk to get to this profit, 13% profit. Simple. End of the day, guys, end of the day, when we deploy the trade, right, I mean, don't look for the profit. You have to first make your trade green or mitigate on the loss once you have the control, and then you have to think about increasing the profit. Okay, so now what happens? Let's say the market bank nifty goes like 50 points or 100 points. Okay, so you will be getting a profit of another 2,500. Okay, so what I meant to say is like you will be mitigating the loss when the market goes up, and then the moment you get the 50 points, right, so you start trailing. So now your stop loss should be another 50 points. Let's say you got the 50 points, so get your stop loss to cost, and then if the market moves another like 50 points, now you get your stop loss to another 50. Start trailing the stop loss. See, guys, I mean, already I've made too many videos on this, right? What I'll do is like I'll just put the video in the description, because it doesn't make sense, right? In another 1 hour, if you're discussing about the naked call, you got the gist of the call buy, right? Even naked call buying also you can do, as and when the market keeps going up, you'll be getting with profit. But my only concern is like intentionally I'm deploying the call debits, I mean naked call here, because what if the market comes down? Okay, there are like two advantages. What will happen is like when market comes down by like let's say 100%, like just 100 points, okay, so you will lose 2,500 here, let's say 2,500. But the beauty of this adjustment is like this has to be like combined with the price action. The beauty of this adjustment is like though you're losing 2,500 because you bought the naked call, market went against you, market came. So maybe if you are able to trap the market within this two soul, this range, what I meant to say is like this range and this point. Okay, so what happens is like though you're losing 2,500, but check how much of profit you're making here. If you are able to trap the market somewhere here, you see though you're losing 2,500, but technically you will be getting like 9,000 profit or 10,000 profit or 11,000 profit. So 11,000 profit minus 2,500, technically you are at almost like 9,000 profit. Okay, what I meant to say is like intentionally I'm going for the call, naked call here. I want market to go against me so that I'll be able to trap the market within this green zone because my profit is huge in this green zone. This is where I have this 19,000 profit. By sacrificing 2,500 loss, I am trapping the market into this green area. I want market to come like 100 points within my green zone, wherein I can just sacrifice 2,500, but I'll be getting with huge profit. Oh, you got my point? If market gaps up, then CE debit or C ratio just may still show loss between profit area. That's not right. I mean, I'll tell you, right? See, this is what happens, guys. Right? When I tell you about one thing, see, there is no straight formula in the market. End of the day, what happens is like if the market gaps up, right, when your call will give you profit. So technically, you will be slowly mitigating the loss, and then I'll tell you like what all other adjustments you can do. So, guys, we have discussed about these two things. One second, let me. Right, we have discussed about C debit spread, C ratio spread. I want to experiment. I want you guys to experiment because this is as close to C debit spread. Naked C buy. I've made too many videos. I'll just try to put the video in the description so that you can see because I've discussed too many times with my real trade guys. With my real trades, I've discussed. Now let's discuss about CE calendar. This is going to be like very interesting, guys. Okay, so can I proceed with other thing? C calendar. All right. Now, see, I'll what I'll do. This is my original trade. Okay. See, simple guys. What is okay? Let me go to this thing. Okay. Now, what I'll try to do, I'll just go for do I have this calendar here? Okay, long calendar, right? See, now what I'll try to do on top of my put debit ratio spread, I'm just deploying a long calendar because I have because downside I have the profit. What if market goes upside, right? So let's say I've deployed this guys. Even I'm doing it for the first time. Okay, now I've deployed a what do we say the calendar. So let me increase the quantity and see. Okay, see that's it, guys. Now, if you do this thing, see, first what I've done is like I've just taken the random, I've just went to ready-made and I've clicked on the long calendar. That's it. The moment I've clicked on this thing, this is how the payoff looks. Okay. Now, what I've done is like the payoff looks because there is a see, still I was able to reduce the profit. I was able to reduce the loss with single quantity. What was my original loss? That's the reason I've taken this base trade. I have two tabs, right? My original loss is 5,181. The moment I'm deploying the calendar, what is calendar basically? 29th March is my sold position and 27th April is the calendar. But if at all someone is not familiar with calendar, I think you have to watch my calendar series. Now, what did I say? Still my loss is 3,000. Okay, but still I was able to reduce, but I'm just increasing the quantity to 2. That's it. The moment I do this thing, this is how your trade will become, guys. Okay, so even if the market goes down, so now check this range. Now you have to, now your range is 3%. Your range is 3% now. If at all you're okay with this range, go for it. If at all you're concerned, try to play with this strike rates and premium. But the magic is you have profit until 3.3% on the downside, and also you have profit when the market goes upside. That's it. Okay, you have unlimited loss, guys. You have unlimited loss, but check you have 2% safety on the almost 3% on the upside and almost 3% on the downside. What is your loss now? Your loss is only 661. And with this strike, what is this? Only from 39,440 to 39,569 is your loss. So if you want to reduce this loss also, right, I'll not show you. You have to try. Simple. If you roll up or roll down, if you increase the quantity, if you, try to select for different strike positions, you'll be able to do that. I'm just trying to show you a sort of template. But are you happy with this trade, guys? Are you happy with this trade? The moment we have deployed the call and calendar, it looks so good, right? You have profit on the downside, you have profit on the upside. Check the profit. Your profit is not reducing. Not a big deal in the margin also. Amrek Singh says no. Okay, so guys, are you all happy with this adjustment? I like this adjustment, seriously, right? With one adjustment, let me show you. With one adjustment, this was my original trade, but just deploying the calendar spread. Okay, let me show you the how does the calendar spread looks. Okay, I've disabled this thing. This is what I'm trying to deploy, guys. This is what I'm trying to deploy. Again, let me show you what I've done. I've just disabled my original put ratio spread, and this is what I'm trying to deploy on my existing Bank Nifty trade. Can someone please tell me, are you happy with this trade? The calendar. Okay, again, let me select all these things. This is how your trade has become. So just let me zoom this out. Anyone who says not happy, okay, there is a small catch, guys. That's what, see, maybe other YouTuber might have told you, right? See, now let me show you one thing, right? So let's say tomorrow, if Bank Nifty opens, 1 second, what is this position? 1 second, this is 39,500. 39,500, guys. Okay, so on Monday, let's say Bank Nifty opens at 39,500. So will you be in profit or loss? Because market is opening at your this red area. Market is opening at this red area. So technically you will be in loss. Right? Tell me, guys. Monday at 9:15, market is opening at 39,500 at your red area, at the loss area. Will you be in profit or loss? Right? See, that's what many people, what they think is, right. If the market opens on Monday, I'll be in loss, but technically you will be in profit. Check the blue line, right? If you want me to discuss about why this blue line is steep upside, you have to watch my videos on the blue line. Okay, let me take you to Tuesday. What will happen Tuesday, guys? Tell me. Market opens flat at 39,500. I'm just going to Tuesday. Will I be in profit or loss? Quickly, guys. I'm going to Tuesday. From Monday to Tuesday, will I be in profit or loss? Will the profit increase or reduce? Okay, let me show you, right? Monday, Tuesday, I'm going to 9:15. Still you are in profit, 5,288. Okay, and now let me take you to Wednesday, which is expiry. I'll be in profit or loss on the expiry, because when Thursday is holiday, Wednesday is expiry. Okay, let me take you, because just to save the time, check the blue line. Now you are you'll be in profit, guys. Still you'll be in profit, but only at 3:30. Only at 3:30. Let me take you to 3 p.m. So now your loss will start 466, and then at 3:30 you will be getting your maximum loss, which is like 1,561. So now let me reset, guys. This trade is good. This trade is good, but this trade will fail. When will this fail, guys? Can someone please tell me when this trade will fail? I did short and crisp answer. Someone already answered, but I forgot name. When will this trade fail? We have deployed VIX reduced. Absolutely, guys. If VIX increase, believe me, guys, because see, the market sentiment is bearish. Okay, so when market falls, VIX will increase. I mean, majority of the time, 90%. If the VIX increase, I'm just increasing the VIX, guys. Check the profit now. Okay, let me show, right? I've just increased, not VIX basically, I'm just increasing the VIX by 2 points. Now check the beauty. Okay, let me get it to 0. Let me get it to 0, right? So you have this loss. Now check the profit. Profit is only 13,578. But just in case if the market falls and the IV shoots up, with 1 point, your profit has reduced from increased from 13,000 to almost 16,000. Your middle part of, what do we say, loss has reduced. Let me increase the IV by another 1 point. Okay, check the beauty. From 13,000, your profit has come to almost 18,000, and now in middle you'll get into profit, guys, with 2,686 on the expiry day, but on the T+0 day you'll get with the 9,214. Right? This is a classic trade. In case if the VIX shoots up, just imagine if the VIX shoots up like 3 points, 4 points. So your payoff will expand like anything. Your profit will but this will give you loss when the VIX decrease. Okay, when the VIX declines 1%. Okay, that's it. Now your loss has increased. Your loss has now increased to 3071 because the VIX has reduced with 2 points. Okay, your loss has increased from original loss, right? Your original loss, even if I do not have this, your original loss was 5,000. So with VIX declining, okay, your loss has increased, right? These are the couple of things what you have to keep in your mind. Okay, every adjustment has its own pros and cons. If at all, if you think that market sentiment is bearish, VIX has to go up. VIX, majority of the time VIX will go up. So then this trade is the ideal trade for them. I use this basically. I use this. End of the day, it's a 5,000 profit, right? 5,000 loss, right? Anyways, this was my original trade loss. Okay, but I'll take a chance. But I'll take a chance for 1 or 2 days. Okay, so this is, see, I can discuss for hours and hours on the what is that, if t plus 1 line behaves differently in live market. Yeah, see, that's what, right? If you look at this t plus 0, this is a projected, guys. No one can calculate, right, the premium, the premiums and everything, how the premium behaves. No instrument, no algorithm can. That's the reason they have given the projected profit. Because suddenly, right, even for the option sellers on the expiry, from 10 o'clock till 1 o'clock, there will be no theta decay. But who is controlling that? No one has a control. All of a sudden, from 1 to 3, the theta, the decay comes. So basically what happens is like no one can predict the premium price. That's the reason they have given the projected profit. But at least we can take the help of the blue line. If that calculation was so simple, then everyone would have printed the money. Okay, this is what we have discussed about the calendar, which we can discuss for hours and hours, guys. If at all you want to see some sort of videos, you have all the end-to-end series videos on my YouTube. You can just go and check the calendars. Okay, so this is not the end of calendar. You can just play with this. If at all, if I increase the quantity to 3, okay, let me reset. Right, this is how it becomes. So technically, I'll not increase the quantity to 3. I'll just go for, let me reset this also. Reset, and let me reset the IV also. This is my original trade. So if I increase the quantity to 3, okay. Now, if someone's view is bullish, now your view has changed. Now the market might go up, but at least I'm a bit concerned. Say even market can be like downside. This, see, guys, do you think this is good strategy with 2 quantity, or this is good strategy with 3 quantity? Ideally, no, 3. I think 3 would be great, because if market falls, see, now we have good safety on the call side. Now let me 3.2% safety you have here, but on the bottom side, on the downside, you have 2.2. But if market falls, VIX will increase. If market fall, though, see, this is where every retailer will get confused. They'll check this blue line. Okay, blue line is very steep. My loss will start from here. So let me go. But technically, right, you have to play with the market. Now, when the market falls, your VIX will increase, IV will increase, right? The moment the IV increase, you will get with more profit. Your range will increase. See, suddenly your range has increased. So technically, what I want to say is like, whenever you get into this situation, right, whenever your blue line is very steep on the bottom, on the put side, but if you think that VIX will shoot up, then this blue line will go like this. It will go like this. As and when the VIX increase, that's what we have seen, right? Let me show that example. Let me increase the VIX to IV to, I mean, technically 5 is too long, but this is how your trade will become. Now, your loss will start now from 2.63%. Ideally, your loss was starting from like 0.1%, but technically, because as and when the VIX increase, the profit will increase, the range will increase, the payoff will expand. Okay, so now, guys, let me see what we can discuss. Now, let me go for my favorite, which is back ratio spread. Right, this is what I use, guys. So we are starting with basics, guys. We are starting with basics. Now, let me tell you about these two are too good, guys. These 2 things, back ratio spread and CE broken wing fly. These are my favorite. Okay, let me show you. So, guys, so far, are we good? See, I know I cannot cover each and everything, but I'm just doing my best in terms of showing you quick template. This is what you can play. And I'm showing everything with my live trade. I'm not taking any obstra I'm just showing you with my live trades. Yes, risk is there, but you have to decide now based on your trading style, your risk appetite, your view, market view. You have to. So now let me take you to back ratio split. I'm sure you guys will get confused, but let me take you to back ratio split. So now what I'll try to do, I'll just get it back to my original trade. Okay, guys, original trade. Let me. Okay, this pop-up is disturbing. Okay, now let me zoom it out. This is my original trade. Okay, simple. What I'll do, I'll go to ready-made. Should I deploy the call ratio split, call back ratio split, or put back ratio split? Guys, should I deploy the call back ratio split or put back ratio split here? Can someone, at least my students, at least Nikhil says call, Sharath says call, Vimal, yeah, Vimal, at least Vimal, I can. You are definitely from a batchman. Okay, now what I'll try to do, I'm just trying to deploy a call ratio back. I'll just use the same ready-made from Sensible. That's it. Let me click on this call back ratio split. Okay, this is the call back ratio split. Looks very ugly, right? But still, I said this is my favorite. Technically, what happens is like when you are deploying the call back ratio split, your expiry should not be the same week expiry, guys. I'll show you. Okay, now let me show you. I'll take the example of bad example of taking the 29th expiry. See, check this 29th March, 29th March, and my original trade is also 29th March. Okay, now check. If the market goes down, definitely you will have good profit, right? This shows unlimited profit because we have deployed the call back ratio split. If market makes like 5% circuit upside, you will get into unlimited. We are not looking at this unlimited. Basically, what we are planning is like, still I'm very sure about the market, but in case if the market goes up, I should not get into loss. Now, my maximum loss is at this position, right? 39,900. Okay, let me get it the market to 39,900. Okay, so today, Monday at 9:15. Again, let me take Monday at 9:15. Okay, if market opens at same thing 39,900, my loss is only 424, guys. Though my loss looks like, if you look at the red black box, right, my loss is 15,000. Everyone will get concerned by looking at this loss. Okay, but technically your maximum loss will be on the expiry day. Your loss will be on the expiry day. Okay, so this is your original trade. Even if market makes a 1.3%, I'm just trying to simulate 39,900. I've simulated, right? Even if the market gaps up by 1%, your loss would be only 424. So this is how I take the chance with the market. Even on Monday at 9:15, if market is opening at 39,900, my loss is only 424, right? I have to take a calculated risk, right? But what if market gaps down by 1.8%, I'll get 9,000 profit. But market is standing here, guys. Market was standing somewhere here. What I did is, hope you're able to, market was standing here. We all know, what I did is like, I've just simulated the market to gap down by 39,900. So then my loss is only 424. But the payoff shows a loss of 15,340. This is where all my students also get panicked by using the BRS. But I'll show you the magic, right? This is not the expiry I'll be selecting. Okay. Now let me show you. What if I go to Tuesday? Check this loss, guys. Check this loss area, 424. I'm just going to Tuesday. Let's say the market stays static, because this is where you'll get with huge loss. Tuesday, your loss will be 3,800. Remember these points, guys, right? Monday, your loss was 424. Tuesday, your loss is 3,800. Though the loss was how much? 15,346, but still your loss is only 3,000. So don't get panicked by looking at this maximum loss of 15,000. Next day is the expiry. Wednesday, I'm going to 9:15. Keep a check. 10,851. Still out of 15,000, your loss is 10,851, right? You remember this thing, 400, 3,000, and then 10,851. If you go to 330, your loss will be complete 15,000. Now what I will do, I'll just clear this trade. Okay. Now I'll select 27th April. Believe me guys, this back ratio spread, you have to select 27th April. You'll get to know why. Okay. Let me select this 27th April and let me deploy a back ratio spread. Click on this thing. Okay. So this is how, let me reset. Okay guys, IV, reset the IV. Okay, now, yeah, this is how your trade will look like now. Okay, on top of my put ratio spread base trade, I've just deployed a back ratio spread. What is back ratio spread? You have to watch my YouTube, because if I start discussing that, video length will increase. Now, what is back ratio spread is, I've taken the 27th April. Now, what I'll try to do, where is my maximum loss? If I increase the quantity to 2, right? So this is what happens, right? But let me go with quantity 1 only. Still you have good profit. Still you have almost like 14,000 profit. But what difference this will make is, let me show you. Now, this is the loss area, 39,520. 39,520. Okay, this is your loss. Okay. Now, Monday market opening at 9:15, guys. Okay, market is opening at where? Gap up by 1%, not 1%. Where is it? Yeah, 0.3%. Are you in loss or profit? Now you have to answer this. Are you into loss or profit? Right? Basically, my view was bearish. I'm just taking a very calculated risk, guys. I'm just taking a very calculated risk of, even if market opens gap up also, what is my loss? Are you in loss or are you in profit? So this is what you have to play with. And I'm not selecting the right what do we say, strike. I've just used the sensible option. But what I do is, like, I select the strike, premium, everything based on the view of the market. But just to show you the example, okay, initially for 29th September, 29th March, was it profit or loss? For 29th March, was it profit or loss? Guys, you have to answer me. Then only I'll be like able to understand, okay, you're following or not. 29th March, it was showing 400 rupees loss. Okay, but this is showing you 2,000 profit on a capital of 1,60,000. Let me take you to the next day, guys. Tuesday, same market open. Still, you're not in loss. So what am I trying to do? I'm just trying to play. Still, my view is bearish. I want market to come down. I want market to fall down. This is where I have my bigger profit. But market is standing center. Still, I'm not in loss. But we are 1 day before the expiry, guys. We are 1 day before the expiry. Initial profit, March 29th trade was showing me 3,000 loss. Do you remember? Now, let me take you to Wednesday. Right now, I'm having a loss on Wednesday. So what I went to say is, like, I'm just playing by just deploying this back ratio spread. I'm just playing with my trade for 2 days. Even if the bank nifty opens static or gap up, mild gap up by 0.3%, or if it makes a gap up of 2%, check my, I have profit only. See, this is where the gamblers will look like it. They will look at this area. I'm not at all looking at this area, but worst case, let's say tomorrow market open, bank nifty opens like 3.92%, 4%. Still, I'll be like with unlimited profit, 14,000 profit. But what am I trying to do? I'm just trying to play. Market for standing here. I'm just trying to trade. Even if market gaps up by 3.3%, 0.5%, 1%, 2%, 3%, I have only profit. But this is what I'll play for 2 days. Only for Monday and Tuesday. On Monday and Tuesday, if the market still stays here, right, then I'll exit this BRS. Then I'll try to do some other adjustments, whatever we have discussed. But I'm taking a calculated risk. Okay, but just still, see, I mean, hope I'm able to express it in the right way. See, Tuesday, I mean, still with profit. 1 day before the expiry, right? Maybe Tuesday, let me take you to 330. 320, 315. So I'm at 542 profit. That's it. What I'll do, either I'll try to do some adjustments or else I'll exit the trade. Okay, this 542, I got my brokerage charges. I played my role. But what happened? Market has not supported me. But I'll not leave. So I have another trade. Now you have to think. If at all you have deployed this back ratio spread on top of your put back ratio, if the market stays static, right now you have to think what contra trade you can deploy. You can deploy a strangle here, you can deploy a, because you have to get, this is sideways market, right? You can deploy a straddle, you can deploy a strangle. I mean, there are like iron fly, broken wing fly. Guys, do I make sense? So I mean, so far, now downside range increased. Yeah, I mean that's what you have to, yeah, downside range will increase. That's what you have. My view is bearish. That's the reason I'm taking this. Even if the market is bullish for 2 days, but what if market stays bullish and then all of a sudden on the expiry day, if market opens here 1.3% gap down, or throughout the expiry day slowly it starts moving. If it expires here, you'll get with some good profit, right? 14,000 profit. Check the range, guys. Check the 14,000 profit on a capital of 1,67,000. Now you decide what is the percentage. We are not deploying 10 lakhs, 20 lakhs to see the 14,000 profit. We are just playing. Yeah, you have to keep an eye on this range, guys. You have to keep an eye. See, I cannot explain these many adjustments. I cannot explain you with all, right? I mean, watch this video. You have to play. Now, guys, can I jump on to the next this thing? Okay, so this, I mean, you can just play with, right? I'm not telling you just to go with 27th April. You can go with 13th April. You can go with 6th April, but not with 29th March. I would recommend you to go for at least for 6th April or 19th April, 13th, or go for 27th April, because you get good liquidity in the 27th April. This is what I do. This is what I do, guys. Okay, I deploy the 27, but the strike selection, premium selection, guys, I mean, it will take some time. You have many videos in my YouTube. You can just go and watch the BRS. BRS is a sort of secret weapon for me. I know all my paid student, I mean, well, sorry for saying paid student, my whoever has got my premium content, right? They know like how I play with my back ratio spread, right? Don't give importance to this maximum profit, 5,000 profit. This 5,000 profit will be only on the expiry day, close to expiry day. But until then, we will just exit the trade. I'm just taking the calculated risk. Okay, now what I'll do, let me clear out this. Okay, let's discuss about CE broken wing fly. Okay, now give me a second, guys. Give me a second. Someone is clear. Okay, now, okay, see, now what I'll try to do, okay, now I'll try to deploy a iron fly. Okay, why do we use iron fly? Why do we use iron fly? If you have a sideways view, okay, my loss is 5,181. So let me take you to, so let me deploy a iron fly. Market stands at 39,400. So let me deploy a iron fly. Sell. So I got 300, 300, 600, so almost 700. What do we say? Premium, right? So let me go for 1, 2, 3, 4, 5, 6. Let me randomly pick, right? 700. 1, 2, 3, 4, 5, 6. Let me see. If I deploy a iron fly on put ratio spread, do you think this looks very weird, right? Are you happy with this payoff? I've deployed the iron fly. Basically, looks very weird. It's, you have huge profit now. Your 10% profit has increased. Not a very big deal on the capital. Even if I deselect this thing, right, from 1,36,000 margin, your margin has only increased to 1,81,000. So what can I do, guys? What can I do to make it more interesting? To make it the payoff? My loss has increased basically now. We are planning to reduce the loss. My loss has increased to 8,000. Yeah, SG says right. So how to make this broken wing? SG, can you please tell me what leg I have to delete? So now, do I need this put leg? Or now what I'll do, I'll just delete this. Okay, guys, now what I'll do, I'll delete this. So now, okay, see, it all depends now. So let me randomly select This is the broken wing fly, right? This is your straddle, and top of that, I'm just deploying the wing of, I'm just buying the call. Now, if I increase the quantity, see, this is what you have to play. If you do not increase, if you're just going with one single broken wing flag, guys, I've just randomly taken the buy. Even if I go to 39,800, see, 40,000, this is how you'll get more safety. So now you have to select your what do we say, strike selection. See, if I go to 39,800, see, if I go to 39,600, this is how your trade will become. Now, if the market makes a circuit of 5% also, minimum you'll get profit of 754. That's it. You still have good range 3%. You still have up to 7% profit. Market going up. Okay. Now, what if I get it to 39,700? You'll have a minor loss. What if I get to 39,800? You have to play with this thing, right? Just to reduce this loss, what you can do, you can just increase the quantity. Right. The moment I've increased the quantity, check the beauty now, right? You have to understand this payoff now. The market stands here. All right. You are bearish about the market, right? Anywhere the market expires here, you'll get with huge profit. So you are getting additional, almost like until this break even, you are getting some cushion basically. Even if the market expires here, you'll get with good profit. Even if the market expires here, you'll get with good profit. Even if it expires here. But if the market opens a circuit here, still you will be with some decent profit. You'll get your brokerage charges and everything. So I'm not trying to show you like how to get the profit, but if at all your view is sideways to mild bearish or like maybe super bearish, you can just go for this. And again, I'm telling you guys, don't forget about this thing. If you're concerned about gap downs, remove this thing. That's it. So now you can check the beauty. You have exited this trade, point number one, and now you're deploying a broken wing fly. So now let me increase 1 second. That's it. Okay. So your profit has increased, your margin has increased. Right side, you have the good profit, you have good range, right? See, there are like different variations, guys, of using the broken wing fly also, but I've just shown you a sort of template. This is how you can play with the market. Remove CE cell. Yeah, that's what I've done. CE cell. Okay. Okay. Yeah, I mean, you can just play, right? It all depends on, if your view is bullish, go for this thing, right? If your view is full bearish, right? I mean, you can just go for this. It all depends, right? So that's what adjustments are very dynamic. If I get it to one single lot, this is how your trade will become. If you get it to two broken wing fly, this is how. If you are like three broken wing fly, this is how. Now minimum you'll get 6,300 profit on a capital of 4,51,000. If the market expires anywhere on the upside, still you have up to 7% profit here, right? It all depends basically. Now the market makes a circuit also 6,000 on a capital of 4,51,000. It all depends on your view. So you have to play with the strike and the premium selections. Okay, so one session we are discussing. Yes, it's up to you guys. Now quickly see CE butterfly. I'll not explain you, right? Basically, what is CE butterfly? It's a directional butterfly, right? Now delete this thing, clear, get it to your base trade. Okay, now what you do, you try to deploy a call butterfly. What I meant to say is like, let's say you are deploying a butterfly, something like that. The market expires here, you'll get with good profit. So this entire loss will be mitigated. Or else, if you are super bullish of the market, deploy a butterfly here. The moment you deploy the butterfly, this loss will be reduced. So now you have to select the quantity and everything. So now let me take you to one interesting thing, guys. One interesting thing. So now we have discussed about all the directional trades. Okay, even this is directional trade. My bank nifty put ratio spread is a directional trade. So we mitigated the loss with all the directional trades. And now let's discuss about one or two examples of non-directional. Okay, now what I'll try to do. This is my base trade. Okay, this is my base trade. So what will happen if I deploy a strangle? What will happen if I deploy a strangle? So let me show you. I'll go here. See what I'll try to do. First, let me take the example of the same thing. Neutral. I'll go to same sensible. I'm just trying to deploy a short strangle. Now, no, sorry, this is for 29th. Let me take it to 29th March. I'm deploying a short strangle. Are you happy with this payoff, right? Good safety on the put side, but safety is only 1.5% on the call side. What can I do? This is what I've done. I've just deployed a strangle on top of the put back ratio split. What can I do, guys? If you're happy, go ahead and deploy. But what I'll do is like 168 is too huge. So basically what I do is like when I go for strangle, just to get more range, more safety, what I'll try to do, I'll just select the premium. Like, let me select the premium. Sure, let me show you for 50 rupees. And then even this one, I'll get it to 50 rupees. So basically what happens is like, see, when you go for not aggressive premiums, right? So now you have a safety of almost like 2.30% on the upper side because your view is bearish. Okay, your break even is almost there, guys. Your break even is 0.1%. If market makes a downside move, you have a good profit. Yeah, your break even is almost like 4%, guys. But check this, you have a safety of 2.35%, but you have a loss of 2674. Still a good deal, right? My original loss was 5,181, which is fixed. But basically, when I deployed a strangle, my loss I was able to reduce 264. What can I do to increase the loss, guys? Here 2.5 2.35 percentage range on the upside is good. What can I do to mitigate this loss also? What can I do? Seaside. So there are like too many things you can discuss, but let me increase the quantity. That's it. Let me increase the quantity to 2. Right. See, now check. You have 2.5% safety. Your loss is almost zero, guys. Your loss is almost 166 is the loss. But check the profit. Right. This is all about the view. But if someone view is bullish, again, don't tell me, right? What if the market goes up? Go for call ratio. This is what I meant to say, guys. Now you have to connect all these dots. What is your view? If it is like super bullish, go for back ratio spread. If it is like sideways to bullish, go for call debit spread. This will work as very good CE ratio spread. Go for a naked call buy. Now don't again come and tell me what if it's right this trade, right? Basically, if I show you this trade, now people will ask me question. What if see 2.5% is what if it open 3% gap up? Then my simple answer would be like go for naked call buying, right? Or else go for CE debit spread, go for CE ratio spread, go for all directional trades. If at all you feel that market can be like already this has made a huge downfall and maybe market can be like sideways here, right? Can be sideways here, then go for strangle. Okay, this is what, let me zoom this out so that you'll get. So now you have a safety of almost like 2.3%, right? You're almost at your break even. If Bank Nifty makes, this is just to manage 3 days of trade. You have 6%, guys. Right, weekly 6% is check the range, right? Check the range. It's not something like your range from this position to this position. You have 6% from this position to this position. You'll start with low to high profit, and from this position to this position also you'll start from 6, maybe 5, 4, 3, and then you'll not leave, right? You'll start doing the adjustment because always you have this thing, right? Even if you remove this thing, your range is increased now. If someone has consent saying that, see, if I have this thing, your range was 3.8%. If I delete, if I exit this trade, like your range has increased to 4.4%, but loss has increased here. So now what you have to do, either you increase the quantity or else you play with the strikes, you play with the premium. If I increase the premium, check. Right, I've increased to 75, 80, that's it. See, end of the day, it's see, you have to have the knack of playing with the strike, playing with the view. Should you go for quantity? Should you exit this trade? Unless and until you think about this thing, guys, doing the adjustments are tough. But whatever I've told, if you feel like this is like looks very cumbersome, no, guys, you have to practice it, and believe me, this is what you will do. This is what I meant to say. The only way to trap the mistake. This is what, right? This is what I do basically. This is called the contra trading. Simple. Wherever your loss starts for your primary trade, deploy a trade B as a contra. Whenever your loss of the trade B, that is contra start, trade deploy a trade, contra trade assets, trade C. That's it. You have to just play. This is called auto adjustment. One trade will manage the other trade. Am I clearing the terminal? No. I'm not a full-time trader. I basically enjoy trading, guys. Basically, I enjoy the trading. That's it. For me, saving capital is important. Did I show you anywhere you will get with bumper profit? What I have shown you since from last 1.5 hour is like saving the capital. That's it. And you'll be able to save the capital just by trapping market, right? We are trapping the market, right? Unless and until it is a 5%, 10% gap up, gap down, you have to think whenever on the P side, guys, let me tell you, forget about the circuits on the call side. We ever seen 10% circuit on the call side, 15% circuit every time it is on the what on the call on the put side. So do one thing whenever you want to on the put side, right? Irrespective of any trade, ensure that your put side is saved. So this is what I do. The reason why I'm holding this trade is still 4.3% is a decent. I mean, I'm not expecting 4.3% on Monday. Even if that happens, guys, even if that happens, let's say 5% gap down. Okay, anyways, see, which is like 6,761 profit or loss, right? On a capital of 1,36,000. I'll not get into huge panic. That's it. Exit the trade. Or else what I'll do, if the market opens at here, I mean, there are like other adjustments. I'll just buy a put here, naked put. That's it. I want to take the advantage of rising wicks. The moment the market opens at gap down, what I'll do, I'll just buy a naked put at the ATM. That's it. If the market keeps going up, right, whatever loss I've incurred, slowly that loss will be like converting into profit. If the market comes up, I want market to come up. If the market comes up, by just sacrificing 50 rupees or 100 rupees into 25, like 1,250 or 2,000, I'll be trapping the market into my green zone, right? I'll risk 1,250, I'll get more profit. This is where, guys, I've made this video. I'm not sure whether you guys are watching. What did I say? I mentioned somewhere, right? Yeah, this is a strategy when market gives you many opportunity to risk 1,250 and get up to 10x, 20x profit. I do so many times. Watch this video, guys. Watch this video. Believe me, right? This is not less than a paid video. I don't know why people ignore, but see, one thing what I can do is like my responsibility is like just delivering the content. If I mean there are like so many people who message me saying that see, I mean, I'm spending more and more time on understanding the contra trade. It takes time basically. When I say contra trade, it takes time, but you have to be familiar with all the strategies. You have to be like familiar with all these strategies, guys. Then only you can play the contra. When I say you have to be like familiar with C debit spread ratio, all basically your directional and non-directional. And if at all I want to discuss about this thing, right? This is I'll not discuss much on this thing, but self-explanatory. Right? For your bank Nifty trade, you can also deploy a contra trade in Nifty. I'll not explain because I've done n number of videos. See, now what I'll try to do is like, let me take it to my playlist. Guys, if someone is new to my this thing, go and watch this video. Contra trade logics. You have 17 videos, guys. Believe me, you'll not get anywhere on the YouTube. I mean, if someone can prove me right, I'll give you my content for free. If you get this type of trades, this 17 videos, watch these 17 videos. This is how you do the contra trade, right? How to trap the market. I made a 7 minute with all my real trades. This is not something like I'm doing it on the Opstra. Everything is my real trade. I'll show you all my real logs, my Angel account, my Zerodha account, MStock accounts, everything. Watch all these videos. Okay, now coming back to this thing, guys, almost we are done. Almost we are done. Give me 5 minutes and we are all. So now let me explain you this thing, right? So let's say you have a put ratio spread, okay, in the bank Nifty, right? What is this? Banking stock. So let's say, right, let's say the market stands here. If the market, if bank Nifty goes downside, you will be getting into profit. What if market Nifty goes up? This is what I do. I just deploy this banking stock. Let's say I'll enter into long swing trading into STFC or Kotak or SBI Bank, whichever stock is at the support. So even if the bank Nifty goes up, Okay, so my loss would be like 5,000. We all know, right? My loss would be 5,000. I'll try to mitigate this 5,000 loss by going long into Bank Nifty stocks. So let's say I've taken HDFC and SBI. If Bank Nifty goes 2% upside, let's say, imagine, so HDFC will also go by 2% or 2 to 3%, or SBI 2 to 3%. So whatever loss I have in my Bank Nifty, that loss I'll be mitigating with my swing trade. See, already I've made this video also, right? I would recommend you to watch. And Bank Nifty cannot go 2% upside, 2% upside, right? So one day it has to come down. So maybe it goes by 2%. The next day again it comes to 1%, and then the next day again, if I'm able to trap, so I got profit in my swing trading, I'll exit this. Right? Then if Bank Nifty makes a U-turn, I'll also capture the profit in this with my PE back ratio spread. All right, and USD INR, I want you to think. See, end of the day, what is USD INR? Okay, so I'm not talking about Nifty. If Bank Nifty, end of the day, Bank Nifty comes down, usually we know that USD INR will go up. If USD INR comes down, Bank Nifty will go up. So just try to think about the contra trade by using the USD INR for your Bank Nifty ratio spread. This is what, guys. So sorry we could not discuss about the iron fly straddle. So I want you guys to explore. So let me quickly show you, right? Let me quickly show you 2 minutes, guys, and then I'm done. Right? This is what you have to do. Okay, this is my base trade. Just go to ready-made trade. Right? So what will happen if I deploy a bull this thing? Now see, you have to play with this thing. Right? What will happen if I deploy? Let me take some other trades. Right? See, call ratio spread. Right? This is what we have seen, right? Right? You have to see, the moment we deploy the call ratio spread. So now it's your responsibility to reduce the loss here. So now play with the strike. This is a call ratio spread, right? 1:2. Okay, so downside you have profit, upside you have profit. So now it's your responsibility how to decrease this loss. Can someone please tell me how to decrease this loss, guys? Please tell me what trade I can deploy. Let's say you have deployed, right? How to mitigate the loss of 3,851. Straddle, that's it. Go for straddle, go for strangles, your straddle, your strangle, your butterfly, iron fly. That's it. You have to think the moment you deploy this trade, that will have impact on this profit, that will have impact on this profit, right? If you deploy the iron fly, maybe this will become flat, right? It's up to you now. See, what did I say? Either it should be heads or tails. If you want heads and tails, I mean, that is gambling mindset, right? You have to deploy, but without deploying the straddle and strangle also, if you can just play around with this strike selection. See, let me show you, right? 2 upside and let me take it to 2 downside. That's it. I'm done. But again, this depends on the view. Okay. Without, see, now you have to go like this. Just play around with the strike selection. Now, see, almost this has become green now. Right? Did I deploy any straddle strangle here? No, right? Still you have profit, right? Up to 10,000, and you have up to 20,000 profit if the Bank Nifty makes upside movement. Right? This is, see, guys, believe me, the content what we have discussed, right, you'll not find anywhere on the YouTube. I mean, this is what I've discussed with my paid mentorship program, but at least I thought, okay, let's have a session, right? Now it's up to you whether I'm not doing any gambling, I'm not doing any magic here. Everything I'm just explaining you in front of my machine, and also I'm taking the real trade. Now check, you have to concentrate on this margin. That's it, guys. I would rather say leave on this call side, but never ever ignore this put side. Why am I telling leave on the call side, right? When market goes up, VIX has the tendency to come down, guys. That's it. You have to be a volatility trader. You'll not get into panic situation. Even if the market opens like 5% gap up, right? VIX has the tendency to fall. So falling VIX will not increase your premium. But when you are thinking about the put side, when the market falls, VIX will shoot up. That's the reason. Do not give any sort of what do we say, right? What do we say, right? Consider this range. You should have more range on the put side, because falling market will increase the VIX. Increasing VIX will increase your premiums like anything. There you come into the panic situation. So whenever you are deploying any trade, Give importance to this one, this range on the downside. I'll for what I'll do is like I'll ignore this complete right side. Seriously, first, if at all I'm comfortable with this put side, then I'll think about this thing. Okay, now if I want to have more safety on the put side, I'm okay to reduce the loss on the call side. That's it. I don't want this big pyramid, right? Even if I have a flat structure, I'll share the I'll what do we shift the profit of my call side to put side so that I get more range. I should get more range here, more range, more range. Does that make sense, guys? So what's the time now? My goodness, 7:30, 8:30, 9, almost okay. My plan was to just complete this in 1 hour 30 minutes. So I think what I've committed, I've delivered to you. So now it's up to you. Maybe one can go, yeah, I mean, that's what, yeah, ready is. It all depends on the view. You can go with 1:1:2, or you can go with 1:2:1. See, there is no end for the adjustments unless and until you what do we say, right, come up. I mean, you should have different thought process. Don't give importance to profit, guys. Again, I'm telling you, don't give. And right, so I'm just planning to make a video, and I'm not sure like how many people will accept it. See, with now government increasing the STT charges. Okay, see, do you think, I think trading is only for the serious traders and with big capital. See, what happens is like your profit stands here. Okay, whatever profit I made here, do you think I'll be getting this profit, guys? There is STT, right? I'll tell you, right? There is STT charges, brokerage, all right. Income tax, end of the day, you have to pay the income tax, right? If you end up into 30% bracket, you have to pay 30% income tax. Then you have to consider your trading view cost, your sensible cost, your op stock cost. I mean, so much of health issues. You'll clear the system, right? You have SEBI charges, CDSL. What is that? I mean, see, you are making the brokers or government, and then your profit. You're getting my point, right? This 2,000, right? You will get only like 1,000 profit. I would say like, yeah, 50% is going only for this thing. So just think, guys, if you want to become a serious trader, right, it's all about taking it as a business, and it's all about huge capital. What will you get if you make 1,000 profit by deploying 1 lakh of capital? Think from the longer perspective, right? These many factors. Governments, if seriously, we are making government rich and we are making brokers. Forget about profit. 99% of the people are not even making the profit, but still they end up giving what your STT brokerage, except the income tax and other trades. So just imagine, guys. I mean, if at all you want to take the trading to the next level, right? If at all you want to make your trading as a career, never ever think to make it as a career unless and until you have huge capital. Believe me, even I thought with 1 lakh, 2 lakh I can make, but guys, just consider, you avoid all these things: your trading view cost, sensible cost, op stock cost, right? Your brokerage, STT, I mean, income tax. You will be putting your so-called hard work into the trade, glaring at the system, having health issues. We are losing the friends also, right? Whenever we discuss with the trading with your friends, don't you feel like two people will have different thought process? You think you are correct, he thinks he is correct. I mean, right? So just I'll make a video, guys. Seriously, I'm telling, I'll make a video. Even I thought it's not about smaller capital. The bigger the capital you have, right? It absolutely makes sense if you want to take it to the next level. Yeah, stamp duty, exchange charges. We never considered them into consideration basically, but you have to, right? The 2,000 profit, literally, you have to think that okay, only 1,000 is coming into my pocket, and we are discussing about profit, right? But 99% of the retailers will make losses, but still, do they end up ignoring by paying all this? No, they do not have any choice. They have to go for it, except the income tax. All right, so guys, any questions? Sorry, I mean, we see, I can discuss for hours and hours. If you want, we can have one more follow-up session. But how was the session overall, guys? I want to hear from the non, what do we say, batch one student. Any new student here? Anyone who's attending my session for the first time, guys? If you can mention, if you can just say new and say good session, right? I mean, I think you made my day. Believe me, guys, you'll not see. Honestly, I'm telling that's the reason I've written it here, right? I mean, you prove me wrong. You prove me wrong saying that even you get this kind of adjustments, you prove me wrong. I said this adjustments which will not get anywhere on the YouTube. If someone can prove me, I'll give you all the content for free. Maybe there could be one or two, but check the right. I could have added another 5 to 10 strategies, guys. I could have added iron condor here. I could have added a jade lizard here. I mean, you name the strategy. I can combine these two strategies. I can combine these three strategies. If I start discussing about all these things, right? I mean, it extends. So what the takeaway from this video is like you try to play the same thing, guys. I mean, you will start enjoying the trading. End of the day, I mean it. When I say 1 second, read this. That's it. This is what I do, guys. Contra trading. I call it as a non-traditional adjustments. Don't do the same adjustments, right? You have a iron fly. Let me tell you, right? You have a iron fly. Okay, this is your iron fly. If market stands here, you will deploy a broken wing fly. You'll start trying for selling from here. That's it. The same adjustments you'll do. Rather than this, whenever your loss starts here, deploy a contra trade here. That's it. That can be in the any form. Okay. And for the contract, that I mean, you got it right. I mean, we have discussed since the last 1.5 hours. That's it. Think about the contra trade. Think about the contra trade. It sounds very technically very what do we say complicated, but that is not at all complicated. Thank you, Dhaval sir. Thank you. At least Dhaval sir said that. Yeah, seriously. I mean, I have not seen any YouTuber making this kind of content. And let me know if there is one YouTuber is making this kind of content. I would love to watch those videos. Literally telling my guru is there are like only two gurus. I watch only those two gurus videos, but again, even they are not what do we say coming up with my more videos. I mean, literally at times, uh, I mean, I get into that whenever I want to see some YouTube videos, right? I don't get with such good YouTuber who's making all these videos, right? They discuss about the same iron fly, the same standard adjustments. No one discuss about the contract. Try to do this, guys. Try to get this done. I mean, you don't need any other trainings, believe me. But for this, what I would say is like you have to be good at this independent strategies. You cannot do the contra trading without knowing this individual directional trades and non-directional trades. You have to master iron fly. You have to master straddle. You have to master strangle. You have to master all these things, and then you have to use your experience, right? By doing this with other adjustment. Did you ever thought of deploying a Nifty as a contra to Bank Nifty? I've made so many videos. Banking stocks with your current this trade you have never thought about. USD and just think these are all contra trades. I have done your profit by risking one trade in CA. What is it, CA, Nikhil? Thank you. Who is this? Yeah, thank you, Sriram. I mean, there are like many. See, there are like many advanced strategies, but sorry to say that. I mean, if I say that, then people will take it as this guy is doing some sort of marketing. Guys, if at all, see, one last 2 minutes, I want to take for my own, right? If at all you want to experience more such trades, more such adjustments, more to know more about the contra trades, just in the same video, just put it in the YouTube or any YouTube video, right? You have basically you have my, so let me show you, right? Let me take you to this trade. Just go to this link. Okay, this one, check out my paid mentorship program. If you feel like joining this course, guys, think and let me know. That's it. I'll not try to force. And we add batch one wherein we add like 22 sessions. This is whatever I thought. I do the same thing. But what happens is like people are not taking it to the serious level. They got addicted or habituated of doing the same standard adjustments. Yes, even those stands good, but unless and until you do something non-traditional, unless and until you do not do something different, right? Sustaining the market is tough. So go to this Google Sheet, check out my paid mentorship program, and then if you're interested, please go for it. That's it, guys. So any other questions? Yeah, I'll upload them into the YouTube for sure. So last 5-10 minutes, any questions, guys? I think we have discussed too many things. I'm not sure. Like, any is there anyone who did not understand a single bit? I'll be like very happy to know. Let's have some discount for definitely, yeah. Just try to reach out to me. You have my WhatsApp number, right? Anyone who feels like I've not even understood anything, I think by this time you should have exited this session. But yeah, guys, today is Sunday, so I don't want to waste your time. Also, let's see, right? Every 15 days, let's plan for. But the thing is, like, please try to what do we say, right? Just try to follow me on the YouTube, on the Twitter, right? So wherein I'll be like mentioning all these scenario based questions, and you have to participate, guys. If you participate rather than see other many of the folks, they'll mention about non-trading activities, right? Better what you do is like whenever I'm posting any activity, just try to participate in that, right or wrong, who cares, right? There is no right, there is no wrong in the market unless and until you are when it's you basically. If you feel this is right, yes, you are right. If you feel this is wrong, yes. So I'll try to put more into the Twitter. I'm not active in the Twitter nowadays. I've become very active in the Twitter. Let's see, right? I'll just try to put my base trades, and let's see. Even I want to learn from you. Who knows? Tomorrow someone would come up with a very good unique contra strategy, right? So which I'll be like, anyways, okay to learn from him. Can you please watch? See, everything is there, guys. Everything is there. Just that's what, right? Just go to this Google Doc. You have my WhatsApp number. You have the content. What content I'll be like delivering. What everything, right? You have to do some sort of research, guys. Okay. When I say research, sorry for using that word research. You have to put some hard work. It is spend like 5 minutes. Okay, and see all these videos what I make. Okay, this one. I mean, each and every video I love. Limitation of butterfly. Have you guys seen this video? Right, everyone go for butterfly. It's a very good strategy, but it has a limitation. The maximum profit comes only on the expiry day. No one is aware of that. That's the moment they look at the profit, they deploy the butterfly, but the maximum profit is only on the expiry day. Okay, 1:7 trade converted to 1:42. These are all my real trade, guys. Watch this video without fail. Watch this video. All right. Yeah. Dinesh, I can talk Hindi. I'm from Hyderabad. Right, I mean, I'm just planning to make some videos in Hindi also, but you know, right, I'm not a full-time trader. The only reason why I've selected English is, see, I know Telugu, I know Hindi, I know English. So already I've started one YouTube channel with Telugu. The channel name is Telugu Trades, but I'm not active there. But maybe 1 week down the line, I'll start making more videos in Telugu, and I'm planning to make videos in Hindi also. Let's see how it goes. Case of loss in debit spread, can we do roll up or roll down technique? See, basically, uh, I think you have these videos, right? I mean, I've told you, right? So the loss making debit spread, you can always convert it to ratio spread. You can convert it to strangle. I've made all the videos, right? I mean, go to my playlist, search for debit spread. You know, where is the debit spread videos also? Let me show you. You have majority of the videos you'll find it for free, but only there are like few videos. Swing trade, I don't know where exactly is it. Yeah. So if you look at this debit spread series, right, you have all the videos, right? Loss making debit spread, you can convert it to ratio spread, you can convert it to credit spread, you can convert it to strangle. But view of the market is must, guys. View of the market. See, any trade what I deploy, I do not deploy randomly. Everything is backed up by price action. This is my price action in Nifty. See, many people will think this as a junk line, but this is helping me like anything. This price action, see, if you look at my price action, right? If you look at my price action, that's it. My price action is all about trend lines, guys. If you look at this, since from last 2021, this is how the price. I've told, right? It can take a support. It took this support. My view is, right, if this gets breached, then I'll be like bearish about the Nifty. Unless and until this line gets breached, I'm still a sort of, I would not say, yeah, and since from last December, right, it's a downtrend, but still this will act as a very strong support. And in fact, it acted as a very strong support. Check this. All right. So guys, let's give it a close. Okay, so I'll just upload them into the YouTube. Sorry to say, can you please show your? I mean, see. Okay, let me see. This is. I mean, let me show you. Right. If you look at my YouTube channel, I've shown all my 6 months of last 6 months of profit and loss. Somewhere I've made, guys. Somewhere I've made. I'm not sure. Even it at times it's very tough for me to see. Somewhere I made, guys. Okay, in this video I'll say I've shared my swing trading. Yeah, 6 months of profit and loss. You go and check this video, which I've shared 3 weeks before, and also I've shared my swing trading also. And believe me, I've made almost like 68% in my swing trading in the last 6 months. I use more of E margin, guys. I use more of E margin. Okay, let me show you. Did I show? See, this is my paid group, guys. Let me show you. If I have something here. So this is what we keep on discussing in my. See, if you look at my this thing, okay. Let me show you. See, if you look at this thing, 42,000 I've made in last 14 days, I believe, and you will be like surprised to see this 42,000 profit I've made maybe by using like 1 or 2 lakhs, or maybe at max 3 lakhs. That's it, guys. These are all E margin trade. Though I'm using, see, check this HDFC Bank. I made, where is HDFC Bank? 1 second. See, I made almost 7,800. I might have used only 1 lakh capital here. That's it. Basically, what I do is like wherever you see 1 lakh, I deployed only 25,000 here, guys. That's it. Remaining 75%, I take it from the M stock. These are all my M stock trade. So this is 1 lakh value. So I've just deployed 25. So on 25,000, what is this profit? On 25,000, what is this? Maybe here I might have used 50,000. So I made almost 4,248 on a capital of 50,000. This is for 50,000. This is for 25,000. So wherever you see 1 lakh, I deployed 25,000. Wherever you see 2 lakhs, I might have deployed 50,000. So HDFC, I made almost like, see, maybe close to 1 or 1.5. Right, so I made almost like 42,000. If you want, I can share you the screenshot also. See, guys, 1 second, right? See, when I'm talking about these many adjustments, okay, so don't you think making money from the market is not easy for someone who is discussing about so many unique adjustments, right? Maybe it is something like someone who might have experienced all these adjustments. Yeah, I mean, you have the rights to ask the profit and loss, but don't go on others' profit and loss, guys. Seriously, I'm telling. Go for the content. One thing is like in my paid mentor program, I do not give any tips. I mean, I've bluntly written somewhere. I do not believe in giving the tips. I'll not believe in giving the recommendation. Saying that, but I'll be sharing you my live trades. So let me show you, right? These are all my live trades. The moment I take the trade, I'll say, boss, I've entered into, let me show you, right? But I'll not give the tips saying that you enter. I'm just sharing you my live trades. If at all I start giving the tips, right? So there is no use. See, booked 4% in USD INR in just 2 days. Okay, let me see. These are all. See, I shared the price action. We discuss about different trades. Deployed a new trade in Bank Nifty for the next week expiry. That's it. This is how I show. The moment I take, I share, but I'll not give the tips or recommendation. But if someone is expecting tips or recommendation, this is not the right channel, guys. Chalo, guys. Okay, then. So let's have one more session. But I was not expecting, but we had a very decent audience also today. Okay, chalo, then good night. So I'll be deploying this trade into, sorry, not trade. I'll be uploading this video into YouTube also. You can share your comments. You can share your feedback. All right. Good night. Chalo, bye, guys.